You're listening to Alternative Investor Mastermind, where we do a deep dive on alternative investment opportunities and the lifestyle it can create. Join Jack Krupey as he presents actionable tips and tricks in doing passive real estate away from mainstream strategies. Go beyond the usual fix and flips and try less explored yet rewarding investing ventures, from multifamily properties, mobile homes to cryptocurrencies. Do not miss this opportunity to escape traditional assets and finally create wealth without Wall Street. Now your host, Jack.
No discussions in the podcast are meant as an offer to sell or a solicitation for an offer to buy any security. All investments should be done after careful review and consideration of the investment documents and disclosures. Contents discussed in the podcast are not meant to be construed as an investment, tax, or legal advice.
Hey, everybody. Welcome to another episode of the Alternative Investor Mastermind. Jack and Zack are both here today, and we're going to talk about all things election and what the outlook potentially is for 2025. So let's get right into it. Zack, how you doing?
Yeah, doing well. Do we have anything to talk about? Did elections happen? Is there some change? Do we think there'll be some changes on the horizon?
Yeah, well, I'm glad it's over for sure too. I think regardless of what side you're on. So, but yeah, lots of stuff to talk about. And I think before we got on today, we were talking about tariffs. So we will start with tariffs. What do you think about tariffs?
Yeah, look, I mean, it's really, for me, tariffs are one of the major focal points for the Trump campaign. Whether it be tariffs against China, Mexico, whatever, other part of the world, and whether the reason is because of, macroeconomics and global politics, or if it's more about bringing jobs to the U.S. Either way, tariffs are a hot topic. And most of what we've seen so far has been anywhere in the 10 to 20%, rate on these tariffs. So, I mean, we could really see that affect real estate in addition to just business in general. So yeah, and it's a double-edged sword because I do worry that tariffs will increase inflation. I mean, certainly from a marketing and campaign perspective, it was extremely effective. Even from a potential negotiation perspective, I mean, there's been anecdotal stories of companies canceling plans or shelving plans to build another factory offshore because of the uncertainty of what the tariffs would be and would the plan be economically viable. So obviously, more jobs in the U.S. Is a good thing, but ultimately the downsides are that it's is going to make things cost more, and a majority, or at least a portion of those tariffs do get passed on to the consumers. Who knows exactly what percentage it is? It really it depends on the product, but that's from a real estate perspective. My fear is that it causes inflation. Certain building materials, supplies, and or wages because of products that are made in the U.S. by more expensive workers, and that could put some pressure, renewed pressure on inflation. And then the question is, does the overall growth and efficiency outweigh the inflation? Yeah, I mean, the big question when it comes to inflation, when it comes to tariffs, the question is how much can be passed on to the consumer at the end of the day. When I say what can be passed on to the consumer, we can be talking about the cost of materials, the cost of food, but also, like you just mentioned, the cost of labor. And one of the main issues that we've seen in the U.S. in recent decades has been a lack of wage growth relative to inflation, relative to cost of living with housing prices. And that's why there are more and more renters in the United States every day. So, the way that I see it, with tariffs, you have a lot of the operators that we work with who source materials wholesale direct from China. And that's really one of their competitive advantages, is that they can buy 1,000 countertops. They can buy, 2,000 sinks, right? These different things that go into a standard value add renovation. And that's really where they make the margin, is by buying wholesale. How much of that margin now gets eaten up by potential tariffs? Again, whether it's Mexico, whether it's China, this is, from what I understand, tariffs
look like they can be global, with some countries being hit harder for various reasons. Now, what we've seen, though, on the other side is that how much higher can rents go right now, right? Which is another piece that we'll go into later. But you can only pass on so much to the consumer before it no longer makes sense for them to either live in a more expensive renovated apartment, or whether they're buying, something to renovate their own home, or even the cost of food.
Yeah, we've definitely seen rents approach a level where affordability is the main constraint over the last few years. And you're right that for decades or more, you had inflation and just overall economic growth, and wages have been lagging behind. I think to some extent, there's been a big bump in wages the last few years, especially post-COVID, when you had the rampant inflation, and you also had a lot of people leaving the job force, quiet quitting, going remote. So, to some extent, for those that talk about minimum wage, another kind of hot button topic, I think, the free market did correct pretty aggressively for that. I mean, I saw ads for $20 an hour McDonald's in California a few years ago. So, wages have moved as well, and will likely continue to if inflation does go up. And the one thing I'm not sure about with these tariffs too is, we do still have some version of NAFTA. I know that got changed. I think Trump made a change to it in his prior administration. But I read an article recently about certain Chinese products going to Mexico first, getting repackaged, then coming in through Mexico to try to take advantage of NAFTA. So it'd be interesting. Every deal seems to have some type of loophole. So ultimately, the question is how aggressive is it when it comes to fruition? He did keep for better or worse, kept a good amount of campaign promises, probably slightly more campaign promises than perhaps other presidents had kept, at least on the key hot button issues the last time around. So we'll see what happens.
Yeah, no, it's interesting what you say about companies that are taking products from China, repackaging them in Mexico. And one thing that we've seen heavily here in South America, where I'm based, is heavy investment into infrastructure from China into these other countries, whether it be Ecuador, Colombia, Mexico. And so, the question is, how is the new, Trump administration able to monitor and handle that? One with a leaner government as well, that that we've seen the Department of Government Efficiency. And, again, what does it mean at the end of the day for the end consumer in the U.S. who is not seeing wage growth? You mentioned the $20 minimum wage in California for fast food workers. What ends up happening in a lot of these cases is at a certain breaking point, the companies, for example, the fast food companies, can no longer afford to pay these wages. But at the same time, housing costs and everything go up to reflect higher wages as is expected. So there's really a lot of uncertainty, as there is with every election cycle.
Yeah. And I order a fair amount of DoorDash, Uber Eats, I'll use the Chick-fil-A app. At some point, you don't need cashiers. Maybe you need one cashier and not five, because everybody under 75 years old is gonna just use their phone app. And there's plenty of I think as time is going on, there's plenty of older people that are pretty internet savvy and use iPhones themselves too. And it's the world is really changing. So it's going to be interesting to see. And on the point of the kind of the more geopolitical side, I think I've quoted Peter Zeihan a bunch on the podcast about the kind of the disunited nations and sort of the he'll say the end of globalization, but maybe just the U.S. taking a step back to some extent from globalization, and that's that's the other side too. Defense is one of the biggest parts of our budget, and at the same time, defense is somewhat of a jobs program for the U.S. A lot of that money is going to Halliburton, Palantir, whose stock is crushing it right now. So it's not just laying off a percentage of the workforce or trying to be more efficient. It's it's the, other than I guess the interest rate on a debt, it's the biggest part of the budget. So the other risk is if you massively cut government spending, that could cause recessionary issues in the U.S. and unless that's really replaced by just privatizing it and just more money gets kind of sent down to the states. But if it's legitimately a cut on spending, that could have some impacts on look, 4 of the 10 richest counties are outside of D.C. With that said, very few of them are most of them are not tenants in apartment buildings that we're invested in. But it still could have trickle down effects, if you will.
Right. Well, and the question when it comes to, like you mentioned, where are we investing in apartment buildings? The question is with these, like the deglobalization that you mentioned, moving, jobs back to the United States, which has been, a Trump campaign policy now for 2 election cycles. The question is, where do these jobs go? What is being built out and where and how? Because in a lot of ways, the U.S. hasn't produced any of its own materials for a lot of this for a long time, with the exception of, there are strong lumber producers, for example, throughout California, Oregon, Washington, throughout kind of the northwest of the U.S. as well. Actually, throughout really a lot of the U.S., there's a lot of really a lot of forest land, things like that. But so many of the building materials that we use on a regular basis in the country haven't come from the United States in decades. Whether it's been steel, for example, there any number that we can talk about. Where do those materials come from and where are the jobs created, whether it be the jobs to produce these kinds of materials or the jobs that come with what's being produced, whether it be building out new factories, new distribution centers, logistics hubs, in a lot of these historically blue collar states and, areas that have been largely left behind, which is why, they voted for a change, right? How can you bring more high paying jobs, stable jobs to, a lot of these different states that haven't been able to see that growth. And the question is, with all of this building, with a cut of spending, what does that mean for interest rates and what does it mean for inflation? Because right now we're in a very tricky position when it comes to the future of interest rates.
Yeah, and what's interesting is over the late summer, early fall, the 5 and the 10-year dropped significantly, almost a point, sort of front running the Fed's rate cut in September. What's happened recently is they both ticked back up, not all the way, but maybe 3/4 of the way back up. And I think some of that was the expectation that some of Trump's policies may be inflationary, or that potentially pricing in a stronger economy that may push inflation, or just that the tariffs and other things may be inflationary. So, the short term, the Fed controls rates. Long term, it's really the bond market. Some would say the tail's wagging the dog. Some would say the dog's wagging the tail. It's really tough to say exactly because, there's obviously some soft pressure here and there. And the Fed is independent. But if we remember the last administration, Trump was tweeting every day, putting pressure, on the Fed. And there's obviously, a lot. I'm sure there's a lot of behind the scenes, and there's a lot of other, tools and tricks to try to, influence one way or the other, even just, other things in the economy that may cause the Fed to make certain decisions. So that's what's going to be really interesting. As we're expecting. I'm expecting though that Trump will be banging the drum for rate cuts. Powell's independent, but it already signaled continued rate cuts. So for me, what I'm really curious about is how do the 5 and the 10-year move when the short term rates get down into the call it into the the 2s, if there's a series of rate cuts this year, and or does something change in the economy that makes things move faster, slower, or stall if there's a tick up in inflation. So it's really, it's going to be really interesting. I mean, I follow the 5 and the 10-year more than the short term now because, for loans with short term bridge, it's not that much relief at this point for it to go down another 0.5 point. But for the exit on deals, and for just really where long term cap rates settle, the 5 and the 10-year settling down into a number in the threes, even that's kind of long-term stability. That's where, rates had been for, a good period of healthy times. I mean, obviously you look back in the 70s, 80s, rates were higher across the board, but, I think a rate in the threes would be healthy for just for the overall commercial real estate business.
No, I agree. And I think that's really what the economy needs right now is lower rates. Inflation has been relatively tame over the past several months in a number of key indicators. And one thing that we haven't actually talked about, though, when it comes to inflation, when it comes to tariffs, one of the main reasons that the Trump administration or the Trump campaign really started discussing tariffs is how to make up for the lack of income tax that was proposed by the Trump campaign. This didn't come in addition. This is a way to then potentially eliminate federal income tax, is one of the the promises from the campaign. Now the question becomes, what does that mean for increased consumer spending? What does it mean for inflation with more people with more money in their pockets combined with tariffs? This is what we saw when there was really free money going out in 2020, 2021, is that consumer spending increased, whether it be for rentals, whether it be for dining out, even consumer spending on Amazon, because the consumer had more money in their pocket to spend. So the question is now, will consumers be willing to pay higher prices that come as a result of tariffs purely because they have more money in their pockets because of the lack of federal income tax?
And I recall, they're not going to tax tips. There's a number of those proposals, but you also just reminded me that those tax cuts from 2017 were set to expire next year. So we're going in where we'll have Trump and we'll have both houses of Congress. So it's going to be really interesting to see, do they just reinstate the current? Do they try to go more aggressive? One of the biggest components that myself and us and our listeners, many of us took a lot of advantage of over the last bunch of years was the bonus depreciation that went up to 100%, but it was sunsetting starting last year to 80 to 60%, which was just really lowering the percentage per dollar invested that you could take as year one depreciation. So I know that is something for real estate investors that we're paying very close attention to, because a lot of us booked a lot of losses. In some cases, it was over 100 cents on the dollar per dollar invested. And as we're getting to the stage where those properties are going to sell, that's a substantial recapture if you can't also get a similar depreciation on a new asset. So gonna pay close attention to that. And overall, I mean, we still have record deficits. So the savings needs to come from somewhere. And as much as I'm all for government efficiency, there's only so much that can be trimmed. So much of the budget is the interest on the debt, defense, and entitlements. So those are very much third rail issues. There's only maybe 15 to 20% of the overall budget that even could be touched for that efficiency piece of it. So granted, there's a lot of ancillary benefits potentially from that as well, as far as just less regulation, less red tape. So maybe it's not just trimming that specific budget. It's actually just making it more pro business. But it's going to be an important thing. I don't think we're getting towards a balanced budget, regardless at this point.
Not anytime soon. No, and the question is, another kind of person that I want to talk about here is Scott Turner, who it looks like is getting the nod to be the HUD secretary, who really has been a champion for opportunity zone investing, which became very popular in 2017, 2018, as a result of the Trump administration looking to invest in typically underserved populations throughout the U.S. in these designated zones where you get to defer capital gains tax when the plan started, either 5 or 10 years, depending on when you made your investment, somewhere in that range as well. and potentially not pay capital gains tax on the exit of an opportunity zone property if held for 10 years. So that's another area that we'll be watching pretty closely here. As questions, will opportunity zones legislation be extended? Will it be ramped up, and will it become even bigger than it was? I think that's a pretty interesting conversation to have, again, especially in a lot of the markets that could see new factories, new manufacturing jobs, in a lot of these areas.
Yeah, it's just good to have a pro-business HUD secretary for sure. Being in the mortgage space for years prior, I mean, we saw some of the worst of it. Elizabeth Warren gets her claws into something and sort of stalls what was a very successful program of HUD selling their non-performing assets, and all of a sudden there's tweets, there's headlines, and all of a sudden they stop their sales because the sales were selling to private funds. And then all of a sudden that gets stalled. And then, there's a push to sell to nonprofits. What the nonprofits do? They partner with a fund. It's they're the only ones that have the money to buy in bulk and actually liquidate the properties a lot more efficiently than the government could. So it's, for me, I'm just very happy that there, anybody who's pro-business, opportunity zones are great, but just facilitating investment into these areas and just making things run smoothly and just giving the market a chance to work, I think is just good for the housing market. And we'll get more things done.
Right. Well, and we've seen this actually in a number of deals that we've done throughout 2024 is the government's role in property tax abatements in states like Texas, South Carolina, just to name a couple that we've looked at recently, where you can get between a 75 and 85% tax abatement on property taxes by preserving affordable housing. So, it seems like a win-win for everyone, if you ask me, where you get a discount on property taxes or potentially avoid property taxes entirely by maintaining affordable housing. So, there are plenty of ways that public and private sector can work together. The question is, can it be done on a federal level, which is something that we haven't seen the same way that we've been able to see it again on the state level.
Yeah. I really, I hope it can be done. I mean, that most of those deals are in Texas, which I think is proven to be very business friendly. And, I've mentioned that program, and people from, New York, just the first thing you think of is just like the worst abuses of rent control. And, Texas has done it right, and it's tied to wage growth. It's tied to a factor that's going to keep up, keep close to inflation and not be a situation in 10 years where rents are at $500 and the market rent is $2,000. It's just not realistic. It's like, New York, I wasn't around in New York in the 70s, but it was, New York wasn't what New York is now. And I think there's certain properties just got stuck in a system that's now entrenched and very, very hard to manage. And there's a lot of abuse.
Sure. Yeah, no. And again, the question is always how quickly will government move? And one thing that we have seen from the Trump administration is that they do like to move quickly, whether it be, again, bringing new people in, new policies, and making these changes quickly and really seeing how the market reacts.
Yeah, well, they said that first 100 days, because realistically, you have about a year that then the House is already starting to run for re-election again. So, yeah, there's only it's a sprint. There's only a certain amount of time to really get things done when there is a bit of a mandate right now. So it's going to be exciting to see, and this episode will live on the internet forever. So we can kind of we can go back and see if there's an "I told you so" or not. We don't post a lot of "I told you so's," but we did. The episode with Sean King a couple months ago about Bitcoin was definitely an "I told you so." So we posted a few recaps on that on social media.
Considering Bitcoin is up about 50% since that episode, I'd say you can call that a very strong "I told you so."
Yeah, that's fascinating. That's like one, I guess we can kind of close on this, but some of the talk on that episode is just, the 30 trillion dollars of national debt, and how sustainable is it? And the fact that the government may actually set up a Bitcoin reserve, it could be, really a way for the government to somewhat profit on inflating away the debt. Which again is not going to. I don't think something like that happens overnight, but over a 5-10 year period, it's like the way out of this is to grow the GDP faster than the debt grows, keep interest rates low, and then if Bitcoin does continue to go up, it's a hedge. It's certainly it's digital gold as an example, and it's a hedge against inflation. And if the GDP keeps growing, and that's GDP is a couple $100 trillion, and the national debt's now $30 trillion. Now it's just such a small part of the overall debt that it becomes not as big of a deal. That's the bull case. That's how we get out of it. The other side of it is something I think none of us want to think about. Just Argentina pretty well as well, and granted, the last couple of years they've been. Their new guy Milei has been, I think, doing a lot of interesting things, but for about 50 years, it wasn't exactly a picnic economically.
Sure. Yeah. No, I mean, living in this part of the world, I've seen more economic instability and uncertainty than most. Here in Colombia, we've seen people from Venezuela come with suitcases of cash that they fold into origami and give out for coins because the Venezuelan currency's lost all value. In Argentina, it hasn't gotten to that point because I think they had a more well-rounded economy, whereas Venezuela is 100% based on oil. You sanction, not 100%, pretty close. You sanction oil, and all of a sudden the currency vanishes. Whereas Argentina, luckily, has had a much more well-rounded economy, much more established, considering that 100 years ago was one of the wealthiest countries in the entire world, not even just in South America, in the entire world. Based on leather and cattle exports and just agriculture in general. So, that's one thing that has really stood the test of time in the U.S. is the resilient economy that is extremely diverse from coast to coast and everything in between. So, it's one where I think there's always going to be a bull case for the United States. I don't really see that changing. Neither do people in this part of the world. I'll tell you that. They still think the United States is the best place to invest, because the dollar is still stronger than other currencies at the end of the day. So, I think that sounds like another episode in and of itself, Jack. But
yeah, it definitely is. But that's a very, very good point. We're there's not. I'm not generally the doom and gloom person. We're very optimistic, and to quote Peter Zeihan one more time, I mean, the U.S. is really one of a few countries in the world that's both food and energy independent. We have navigable rivers for which is one of the most efficient uses of transportation for ports, and Argentina coincidentally is one of the top few as well, and it's unfortunate that politics had sort of limited that over the last 40-50 years. But overall, I think the U.S. is in a great place, and if you just look at just how big our economy is compared to the rest of the world, and even given the challenges, I think we're still very, very well positioned. And, the last time there was a major change and shakeup in the world, I'd say was like the internet post, in the 90s, the computers, internet. And that was the last time there was a balanced budget. So, with AI and some of these other changes, which are going to be, dramatic, it happened faster than before. I mean, if the U.S. stays at the forefront of that and is, a leader in that space, I mean, that's going to be good for growing the economy.
Sure. No, the U.S. has been at the forefront of innovation for decades. And the question is AI the next wave that the U.S. will, like you said, will control, will, be the leader? And what will that mean for economies throughout the country? Of course, San Francisco and Silicon Valley has been the leader in tech worldwide for close to 50 years now, going back to, Apple starting out in a garage, Amazon as well, right? There's always been a case for innovation in the US. It's really what the country is built off of, that many countries can't say the same. So, Jack, I'm going to put you on the spot here. Your 2025 crystal ball, since the episode will live on forever. What are your 3 biggest predictions for 2025?
All right. I think bonus depreciation gets reinstated. I don't know if it's at 100%, but I think they're going to do something to stop the sunset. I think rates, the 5 and the 10 year, I think do stabilize and will be lower than they are now. Not dramatically lower. I think there's going to be further. I think AI is going to be starting to really shake up the country and the world. And what's scary about that is that's going to hit the blue collar. It's not hitting the blue collar this time. It's going to hit the white collar. For example, I was talking to a friend the other day, and there's a company, an AI company that works in the legal side of things, sort of like a ChatGPT for law. And not only did they train it, because there was this high profile thing where like ChatGPT made up a case that was just not correct, but it was a company, actually, I think it got bought by Reuters, which owns LexisNexis. And not only is it like a full database of case law, it could actually generate briefs and generate documents. So, you have a profession like law that, now, at some point, every lawyer may be using some version of ChatGPT to do 80% of their briefs. So I think the shakeup is going to be dramatic and noticeable, more noticeable by this time next year.
I agree. And I mean, one thing, I totally agree with what you're saying about law changing, about the legal profession. Add in accounting to that same list where, you can really have a way to send in all documentation, all the information that would normally be run by a CPA or an accounting firm, uploaded into some sort of AI platform to be able to analyze and complete the workload. And, you can do the same thing potentially down the line. I'd be interested to see this for you and I for underwriting, right? The question is, how can you bring all of the data that's available through a lot of the platforms that we use on a regular basis, whether it be CoStar, Green Street, if it's Crexy or, these other platforms, and just better understand markets when it comes to what's being built, what does it mean, pros and cons of different areas. There's a lot to be said for the future of AI in optimizing our workloads. Then the question is, like you said, how does it hit the white collar jobs? So those are bold predictions. I thought you were going to say Bitcoin to 200,000 or, these are, I think what you put out is very realistic here.
Yeah. Bitcoin could certainly get there, but it could be back at 50 and then back at 200 another. You never know. I think we've certainly, it's great to have a pro crypto administration for the first time. And, if you asked me in 2017, I would have thought the US would have just cracked down and outlawed it. And look, this administration, I was listening to Mark Andreessen on Rogan yesterday, and like a lot of crypto executives just got debanked, just like without, really any sort of warning or explanation other than like crypto, their crypto affiliations. The banks just said, hey, we're closing your accounts in 24 hours. You got to move your money elsewhere. So I know we're going to have a much more, the US can be, a leader in the crypto space and sort of a safe place to be domiciled, as opposed to, companies going to, offshore entities to generally be, other than Coinbase. And there's obviously plenty of crypto companies here, but some of the larger ones won't take US citizens, and we're really functioning, really outside the US ecosystem just because of fear.
Right. Well, one thing I know for sure, 2025 is not going to be a boring year. So we'll certainly see where things go.
Absolutely. So this is our, I believe this is going to be our last episode of the year. So we're going to pick back up in January. Thank everybody. Thank you all for listening and being a part of the community. Please like and subscribe on YouTube, on iTunes, on Spotify, or your platform of choice, and engage with us on all social media, both personally and then the JCAM Investments accounts on YouTube, Facebook, Instagram, TikTok. I think we just started a Blue Sky too. We're just any platform that's out there. We're joining. Doesn't say anything about our beliefs. We're open to all platforms, regardless of how they lean.
Yeah, absolutely. Thanks for having me on, Jack. This has been a good chat. We'll do it again at the start of the year.
Sounds great. Thanks, everybody. Bye.
Thanks again for listening. Please remember to like and subscribe on YouTube, the JCAM Investments channel. Also, like and subscribe to the Alternative Investor Mastermind on your podcast platform of choice, iTunes, Spotify, and many others. And connect with us on all major social media, both my personal profile as well as JCAM Investments on LinkedIn, Facebook, Instagram, and even TikTok. Thanks again. We'll see you in the next episode.
That's all for this episode of Alternative Investor Mastermind. Now that you know the many alternative opportunities out there all up for the taking, you can finally become ultra connected and ultra wealthy. Get more valuable advice from the experts by subscribing to the show at AlternativeInvestorMastermind.com. Become a winner in the world of passive investing today in alternative investment strategies. Thank you for joining us. Until next time.